All right, everything looking good. We should be live here. Let's get it started. Welcome back to the channel, Crypto Trend Trader, with our Sunday evening market look ahead. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, it is Sunday, August 22nd at 8 p.m. Eastern Standard Time. And we're going to take a look at the markets. Got quite a bit of volatility last week with our nice little VIX spike. Had a nice dollar breakout, expecting continuation over time. And cryptocurrencies have continued to perform. And then we've seen a nice little mix in our traditional markets as well. So let's get started over here with 10-year treasury yields. Take a look at what's going on with the TNX. So just looking at our daily chart here, we obviously have gotten a nice bounce, double bottom off of our 0.5 Fibonacci level, at which point in time we came up above the 200 exponential and simple, and then we've been basically consolidating at the heart line. At this point in time, it's looking like a slight rejection, but again, I feel like this could go either way. We are getting the hard sell on the Jewel Thief. We are still above the slope line, and the slope line is blue, although we have multiple red histograms here. On the TJD TDMACD. We have the 8 and 21 cross to the downside currently, and we're below them. And then we have the 200 exponential has already flipped over red. We're below the 200 simple, but it does still have a positive slope. So overall, this looks like it's trying to push down a little further. But once we flip this slope line over below the zero line on the TJD TDMACD, we typically do get follow through over time. So on the daily, it looks like we could potentially at least come back down and retest these lows, if not come down and put in a lower low. But when we flip over to our weekly chart, we have had literally just week after week after week of red histograms. We're well below the slope line, and the slope line looks like it's about to flip over red. We are all the way at the bottom of the bearish control zone, and while we've exited the bearish control zone and the stochastics are starting to angle to the upside here, we're still a little ways away from crossing. And again, we did get the 8 and 21 cross to the downside, and we're well below our slope lines as well, which are still cross to the downside and negative slope as well. And then last but not least, on the monthly, we are above our slope line. It is still red here. We have seen a couple months of red histograms, but we are very close to the bullish control zone after that powerful move to the upside. While we are currently crossed back down to the downside on the 8 and 21, and we're below them, we're seeing a little bit of indecision after a powerful move up. So the real question is, is this going to come back down to our next key Fibonacci level, or are we going to base out in this area and continue up? And the truth is, it looks like we have some short-term downside still on the yields. It still looks potential to me that we get down here to like the 1%. But, could go either way, obviously. If it all of a sudden started showing strength, I wouldn't be surprised. If we all of a sudden just started rolling over and showing weakness, I would not be surprised as well. The only thing that would surprise me is if we came down here and took out that low, which I don't see happening. I think more likely than not, we're going to come down here, put in a higher low after that initial sell-off low down here, and then we're going to continue to the upside. But again, we're seeing kind of a mixed signal, a little indecision, as people are basically fleeing to bonds for safety, which is understandable. As there's naturally uncertain economic conditions going on right now. So not only do bonds seem more appealing, even if they're overpriced currently, but also United States American bonds seem even more appealing because there's all kinds of like crazy uncertainty around the world, and less so with the United States, although obviously, it's basically just the cleanest pair of dirty underwear, so to speak. So the TLT, when we look at this, the 20-year treasury bonds themselves, not the yields, we'll see obviously that, we're at a key level. It looks like we're potentially putting in a series of lower highs, but I still would not be surprised at all if we bust through this and come up here and tag our next level and complete out that right shoulder up closer to like the 155 and the 0.5 level. We are above now the 200 exponential moving average. We are above the 200 simple moving average. The exponential has flipped over blue. The simple has not quite yet. We have the 8 and 21 cross to the upside. While we are currently putting in green histograms here, we have flipped the slope over red. We did get the hard buy signal, but it was around the neutral area. So typically this ends up being a little less powerful of a signal or getting much less follow through. Although the previous time when we got that similar signal did result in a nice move afterwards. So, and then if we switch over to our weekly, it's going to tell us much of the same thing. We are inside the bullish control zone. We are still moving powerfully to the upside. We have flipped over the slope line on the TJD, TDMACD. We're above the 0 line, and we have all green histograms. And then obviously 8 and 21 are crossed to the upside. So everything looks strong on the weekly. And then on the monthly, we have had a bunch of red histograms in a row. We're well below the blue slope line. It is still blue, but very much neutral at this point in time. We have a couple green histograms, and we are trying to bounce the bearish control zone here on the monthly. But at this point in time, I would not be surprised, like I said, to see this roll back over. We are very, very close to switching back over the 821, cross to the upside, and, potentially coming back up here for another move to the upside. But once again, any move in the bond market right now would not surprise me. So, and there's so many levers and so many different correlations and like inverse and direct correlations between all these things right now. Any one change can lead to a change in basically the way any one of these assets or markets, etc. looks. So, but let's look at here what's telling us some certainty or giving us some certainty. So here we have obviously the DXY on the daily, very powerful. The key things that we've been paying attention to, and again, this is obviously a massively contrarian play, although slowly but surely I hear everyone moving over to the dollar cult now. Everyone's talking about the dollar strong, and now all of a sudden the dollar is going to go up, and all of a sudden now it's not going to 0. No surprises here. It was all in the technicals, and then when you break down the actual fundamentals and, quote unquote, the U.S. losing its dollar reserve status, we're talking about 5 and 10 year cycle type things. We're not talking about overnight type stuff. So, you can be wrong, you can be right, but if you're early, you're still wrong, or vice versa. So the fact of the matter is, part of technical analysis is not only to determine the long-term trend, but it's to determine functional, useful information that we can make money off of. So that's the most important thing. I don't give a damn if I'm right. I care if I'm making money. I care if I'm making responsible and intelligent decisions that are leading to wealth creation or, wealth preservation. That's what this channel is all about. I could give a damn if I'm right in the long run or wrong in the long run. As long as we're making money, we're winning. We're winning the game. And that's what this is about. It's about winning the game. It's not about being right or saying, I don't want to look back and say, told you so after 20 years of being wrong. No, I want to look back and say, okay, this is working. What we're doing is working here. We are preserving, protecting our capital. We are growing that capital, and we're positioning ourselves intelligently for future moves within reasonable amount of time. I don't want to be, some prepper that is getting ready for an event that's going to happen in 20 years. It's okay to get ready along the way, but how many of these people like Lynette Zhang have been saying for, 10 years how the stock market's going to crash and the whole world's in a bubble and you got to buy gold and silver and protect your wealth. Well, that's great. Awesome. How much more gold could you buy if you would have been in the stock markets for the last decade? How much more gold could you buy if you would have opened up your mind and bought cryptocurrencies? How much more gold could you have bought if you, used real estate investing, etc.? So joining in a cult is great and everything for that one little sliver of time when you're right and your cult is doing well. But for the rest of the time, you're just an idiot and you're in a cult. So that's my opinion on it. It's very important to diversify and to also position yourself along the way. Even if we're in a bubble, which I definitely think we do. I think we're in a bunch of different bubbles all over the place. Some of those bubbles have already popped. So not even everything's in a bubble right now, technically. But the fact of the matter is that, if you just sit on the sideline and say, we're in a bubble, I'm not going to play this game anymore, you miss out on exponential wealth growth, wealth, creation, etc. So, it's great. Yeah, you're right. We're in a bubble. Awesome. And then in the meantime, everything goes up another 200%. So good job. Good job saying that we're in a bubble. Just because you can recognize a bubble is being blown does not mean it's about to pop. So what we're paying attention to here on the dollar is, and what we've been basically positioning ourselves for here on the dollar is, the fact of the matter is we're going into a long-term trend to the upside that's getting ready to result in, essentially probably the crash of multiple other asset classes, as the strengthening dollar is not only going to be like a flea to safety, but it's also going to result in essentially like deflation of all these asset prices and bubbles and everything. And while I think that, many assets like real estate and stocks and cryptos might lose a massive amount of value over the next months or years, or even, whatever, multiple years. It does not mean that I want to be completely out of those things. And it does not mean also that I want to be completely in dollars, just waiting for the right time to pick the bottom. It's actually the opposite. I just position myself accordingly to protect myself in both directions. Because, you never know what could happen with the dollar. Something could just happen all of a sudden, and this thing could just implode and come all the way back down here for, a third touch of the bottom, or even put in a new lower low. And you got to be ready for that, because market's going to do what a market wants to do. The idea is to recognize the probability of a certain, trend playing out or move playing out. So here on the dollar, we have all green histograms here. We have a blue slope line that we're getting ready to cross back above. We're inside of the bullish control zone. We have the 8 and 21 cross to the upside on the daily. We have the blue slope line exponential moving average for the 200 flipped to the upside. And now the 200 simple is flipped to the upside, for the first time in a long time. The last time we had that same signature taking place was back in May of 2018. So what does that tell me? Well, this was our lead in to that move. We had put in a high. We came down here, sold off for quite a while, and then we went into a multi-year bull market, basically a 2-year bull market on the dollar in relation to the, indexes or other currencies in the index. So now here we put in a very clear higher low, and then we put in a double bottom scenario with some bullish divergence, and now we have started what amounts to probably another 2-year trend. And, it doesn't have to be exactly 2 years, but what we can look at is, from the top of the previous lead-in to that beginning of the trend, how long was it? Well, it was roughly 491 days. Okay, so from the next one, if we have 491 days to basically that cross, that lead-in, we have 466 days. So we have essentially the same amount of time, give or take less than 10%. It's like a 7% variance in the downturn from that top to that bottom. So I would imagine that probably we'll get something similar in a move to the upside, close to that. So if roughly we went, to the peak, if we went roughly 692 days, we're looking at roughly 2 years. So if we have 2 years from what amounted to, July of 2021, that's going to give us July of 2023. The dollar is probably going to top out somewhere around there, roughly, just for a general basis. So, and then if we switch over, obviously bullish on the daily. If we switch over to our weekly time frame here on the DXY, again, inside the bullish control zone, we have all green histograms. We've crossed over the 0 line, and the slope line has flipped over to blue. We have the 8 and 21 already crossed to the upside. Obviously green cross right there. We are still below the 200 exponential and simple. What we need to pay attention to is when we get up to those levels, we do expect at least a temporary resistance or rejection. But what happens once we puncture through those is, a powerful move to the upside. If we do, which everything is leading momentum to the upside at this point in time. But I do expect resistance around 94.75, maybe 95, depending on the overshoot. And then when we go to the monthly, this is when it looks extremely bullish. We have multiple green histograms in a row. We're still below the 0 line. We're still below the slope line, but we have the cross and the exit of the bearish control zone. And now we are above the 21, at least temporarily. So if we stay above the 21 long enough, we'll get the 821 cross. This will flip back over green, and then we'll see continuation of the trend to the upside. And now officially, for some time now, even though we came down and retested the 200 moving averages, we have the 200 exponential moving average positively sloped to the upside. We have the 200 simple moving average positively sloped to the upside. And on this chart going back to 1986, we have literally never seen this signature take place. The dollar has been in a perpetual downtrend literally since, conception, but at no point in time on this chart did we ever, partially because the 200 exponential takes so long to populate on a monthly time frame, but we never had the signature previously. So what do we expect to happen? Well, probably some sort of move like this, something like that. Now, of course, we'll run into some resistance at some of those previous highs, at some of these key resistance and support levels, but everything is pointing to dollar up, strengthening dollar. So very, very important for the macro look at how everything is going to react when a strong dollar almost always results in weakness in everything else, especially lately with precious metals. While it is possible that we do see strength in gold and strength in the dollar, it's at least short term probably not going to happen because they've been inversely correlated. We are seeing somewhat of correlation between dollar and cryptocurrencies, which makes sense as well, as people are fleeing to where they think they're going to be safe at. So if they think they're going to be safe in dollars, if they think they're going to be safe in cryptos, it makes sense that people would run to those things, especially like internationally. So the VIX, obviously we got that powerful move to the upside as expected, followed by an extremely powerful move back to the downside. I do just expect the VIX basically to play out the same signature like we see over and over again. Once we see that pop to the upside, it often just comes back down and levels back out. So in my opinion, overall neutral area for this VIX, while we're in, basically the lower portion of our descending channel right here, we're essentially at the neutral line of our just large horizontal channel, and we're nowhere close obviously to our elevated red levels or depressed green levels. So Dow Jones, exactly what we spoke about last week happened. Everyone got this is the big one, this is it, we're gonna crash. Oh, finally. It was a 1% move to the downside. Everyone got extremely excited or pessimistic or whatever. What happened? Well, it immediately just got bought back up, got bought up exactly off of our blue trend line right here, as expected. Came back up to retest the 821 cross. The last few times that has happened, we have basically come back up and stopped the cross, came back up, stopped the cross, came back up, stopped the cross. We had a couple times where it did actually cross to the downside. So what we're paying attention to now is the follow through. If we do get this cross back to the downside, if we do lose this key level, I would potentially expect it to break. But what specific level did we talk about in our last video? We spoke about this exact level right here, 34,815 on the Dow Jones, which was corresponding perfectly with our horizontal, our ascending trend line to the upside right here. And where did we come down to? We came down to the exact conversion point between our horizontal resistance that we were hoping would flip as, or expecting to flip as support, and that ascending trend line. Found support, of course, as expected, and now here we are at resistance again, the cross of the moving averages. So what do we expect to happen? We expect once again this to get propped back up and continue to the upside. And what was the sell-off because of? Was it magic? Was it Fed? Was it Delta? Was it blah, 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 blah? It was the 1.382. Exactly, perfectly, 100%. Came up to the 1.382, found resistance, and now what's going to happen afterwards? I expect continuation to the upside. If we look at the longer term time frame though, what do we see here happening? Well, we see obviously the rejection at that level, but we see here now we're starting to exhibit some bearish signs. So this is what happens with a melt up. This is what happens. You start to see divergence between price action and the indicator oscillators. We've had consistently weekly after weekly after weekly red histograms. We have now below the slope, and the slope is flipped over red on the TJD TDMACD. We are still inside the bullish control zone, but losing strength, and we're seeing very clear bearish divergence taking place. We have a very clear high right here. We have a very clear high right here. And now here we have what's amounting to a potential third high, but we could very easily get another push up like this that just results in a lower high eventually. And then here we'll see we have, our initial push up here was that high. This is our second one, and now here we have a higher high. So we have essentially what amounts to double or triple bearish divergence, depending on what you're paying attention to on a weekly time frame. So eventually, what is that bearish divergence telling us? It's telling us that the price action that's taking place is unsustainable over time. But on a weekly time frame, it could literally last for months. We could see this bearish divergence continue for month after month after month until the end of the year, and then finally something triggers it in the charts or in the news or whatever, and then it sells off. But when you're looking at longer time frames, just because you're seeing that bearish divergence taking place or bullish divergence on a different asset does not mean, okay, this is it. It's exactly the opposite of that. So now here we have on the S&P, once again, exactly what we spoke about took place. Everyone got extremely bearish on this. We had a little 1% drawdown, a pathetic little sell-off, and then this is it, it's crashing. No, it's not. It's doing the exact same thing it's been doing. It will continue to do the exact same thing it's been doing. We literally got the push down below our trend line, push down below our trend line, at the trend line, at the trend line, below the trend line, below the trend line, and now look here once again, below the trend line. We're back above the 8 and 21. We are below our trend line, but what is this? It was just a bear trap. Everybody that gets bearish sells their positions, flips out, and then the market gets bought right back up. Does that mean that we can't just crash from here? No, of course we could. But is it likely? No. It's going to probably just do what it's been doing, which is continue to melt to the upside. So I do not expect anything different than what's been happening for literally over a year at this point in time, which is a complete melt up. Now we are getting close to those levels that we're paying attention to. We're getting very, very close to our target up here of just over, 4,700 or, 469, 470, depending on what you're looking at. But essentially, nothing has changed for me. Here on the weekly, we have, obviously, once again, bearish divergence taking place. We've lost the slope line. We're still above it, but it has flipped over to red. Again, we see an unsustainable trend taking place, but it does not mean that it's just all of a sudden going to sell off. Now, the index has looked much more bullish than most things do. And when we start looking at the individual stocks, is when we see it truly is a stock picker's market. Because while the indexes are doing okay and individual stocks are mostly getting crushed, what does that tell us? Well, it tells us that there's a rotation taking place, and that if you're not nailing the rotation perfectly, you're going to underperform the markets, because chances are you're going to make one wrong move and then you're going to suffer some big old drawdown, as opposed to the indexes where the money is just moving around, but it's moving around within the index to the point where the index is still making higher highs. So once again, we're seeing a divergence taking place. NASDAQ, IXIC, up here, same thing, got the cross to the downside, got bought up immediately, just like it did every other time when it's broken down from our key level. We retested our breakout level right here on the push down. I do not expect it to retest that level. If we get rejected right here and we start coming down, that's the level I'm paying attention to, 14,143. We're seeing very clear bearish divergence. We have the red slope line flipped over on the daily here. This looks much weaker than the other indexes we've looked at. And then when we go over to the weekly, we see the same thing happening. We came up here, put in another lower high. We have a negative slope line. We're well below that slope line, and it looks like we are losing strength, obviously. But again, could take literally months for this bearish divergence to even activate before it plays out. Matter of fact, I do want to look at the actual monthly here. Still showing all strength on the monthly for now. Still showing strength for now. Now, when we pay attention to the Russell, this is where we're really paying attention to. What happened with the Russell? Well, we came down here exactly to the bottom of the range. Once again, exactly as expected, exactly as declared ahead of time. I literally said that we were going to lose strength right here and come all the way back down to the bottom of the range and find support off the 200 exponential and simple and the bottom of our channel, which we did perfectly. So what do I expect to happen when we are operating inside of a range? I expect us to continue operating inside that range until the one time when we don't. What does that mean? Oh yeah, we're going to keep going up until we don't go up. We're going to keep going down until we don't go down. We're going to keep bouncing around in between resistance and support until we don't. Yeah, anybody could say that. Anyone should say that. It's obvious. It's literally, if every time you played this trend, since we established these key levels, since we established this floor right here, we have touched it the first time, the second time, the third time, the fourth time. This is the fifth time we've touched it. And the top of the range, one time, two times, three times. And the heart line of the range, I mean, you can't even count how many times we've seen a reaction almost perfectly off of this range. So why wouldn't you play what's obviously acting as horizontal support and resistance? Well, because every time we come down to it, you say, oh, this is the big one, it's going to break. No, it's probably just going to do what it's been doing. And it's doing it perfectly. So why expect it to do anything different? And then you can be wrong the one time when it breaks and then immediately position yourself accordingly. We have very clear invalidation ranges. If we break above this area and see consolidation or continuation, we've broken out to the upside. If we break down below this area or see consolidation or continuation, we've very clearly broken out of it. Until then, I expect us to just continue oscillating inside of here. Very clearly now, though, we are at the 200 exponential and simple, which means they have completely lost all strength. We've went sideways so long that we're now just consolidating at those levels. So while I do expect a reaction rally off those levels, eventually I would expect a breakdown from those levels. And now when we flip over to our weekly chart, that's when things start to really show what's actually taking place on these. And keep in mind, the Russell is 2,000 of the main companies inside of the stock market, but not the top 1,000 basically. So you're taking out the absolute best companies basically, or biggest companies, and then you're taking the next chunk of them. So what is this telling us? It's telling us that the other indexes, the S&P, the NASDAQ, the Dow, those are all being held up probably more likely, most likely, or you could argue 100% by a couple key performers. as where something like the Russell is not gaining that same benefit because it's missing those couple killer stocks, those large market caps, those outperformers. So that shows there's a concentration taking place that is leading to a divergence in the actual indexes versus the individual stocks. So now here we have the Russell on the weekly has now officially, with that last test down here, we're all but confirming that we're going to get the 821 cross. Well, the last time we got the 821 cross to the upside on the weekly was in June of 2020, which was way back, during this whole ordeal. And then since that time, what happened? Well, the Russell basically went up, essentially from there to the cross that we're at now, 62% of the to the upside, new all-time highs. So if this crosses to the downside, if we confirm a cross right here, it's saying basically we don't have to come down here and put in a new low, but it's saying we're probably going to get some sort of elongated sideways consolidation or bear market sell-off. The last time we got the cross, we got a nice big sell-off down here, all the way back down to the 200 exponential and simple. The time after that, we basically got just like a elongated consolidation, and then eventually the big sell-off. So, is this basically our run-up after our sell-off? This period of time right here was April 2016 until the sell-off that we had in October of 2018. So this is that 2.5 year period basically of uptrend, followed by, a consolidation and downtrend, lower lows. So here's our, nice powerful uptrend, our parabolic uptrend on the Russell. So when this sells off here, what do we expect? Well, the last two times we came down perfectly and retested the 200 exponential and simple. And then the time after that, we, full on crashed. So if we were to get, for instance, a similar situation taking place from our cross right here down to the 200 exponential, 200 simple, we could expect a minimum of, 25% sell-off and, what qualifies as a bear market in the Russell. So are we likely to overshoot the 200 exponential and simple? Well, based on the last 3 times we did it, yeah, we're going to overshoot it. Could we easily see a much larger move than that? Sure. But there's no reason to think that we would get more than that. We can play it by ear when it takes place. And again, we're on a weekly chart here. So while we're seeing a bunch of weakness, we have a hard sell signal. We have all red histograms. We have a red slope line. We are about to get the 821 cross to the downside. It's important that we keep in mind that we are still above the 200 exponential and simple. And the last time we were below them was a crash back in 2008. So when we came down and saw that retest and consolidation at the 200 exponential and simple, we eventually just let go right here. And then we flipped the 200 exponential and simple to the downside and saw like the actual negative slope. We saw little bits of, the potential of a cross or potential of losing the slope along the way. But, it's been, 13 years, basically 12 years, since we saw that happen on the longer time frames. So there's no reason to think that it shouldn't be a buying opportunity when we do come down to these levels, when that eventually sell-off does take place. And then finally, this is the most important part here. We are seeing for the first time on the Russell weakness in our indicator oscillators. We now have a negative slope on the stochastic. We now have multiple red histograms in a row on the monthly. And then it looks like at this point in time that if we don't get any more of a bounce right here, that we're going to sell off from the 8 on the monthly and come down probably to the 21, which again is going to give us a target of like just under 2,000, around 1,900 roughly. But again, the 2 previous actual stock market crashes, the big bear markets that we did experience back in 2007, 2008, we came down below the 200 exponential and simple on the monthly. And then again here for the CVD dump, we came down here to the 200 exponential and simple perfectly on the monthly. So what would we expect if this area were to let go and we started to see those moves take place? We would expect to find support and consolidation and then finally, continuation back to the upside from those levels. But, is that going to take us down? I mean, again, not predicting this happening anytime soon, but we're looking at, potentially a 50% plus crash, depending on how that takes place. So, it's very obvious that at this point in time, governments around the world have been working as hard as they can to reinflate these bubbles at the cost of, or reinflate the economies, or, fake the GDP so it doesn't look like we're going into a stagflation or deflationary period at the cost of the consumer, at the cost of the peons, the peasants, the worker drones. Okay. And what does that mean? Well, it means inflated asset prices and actual inflation on necessities taking place all over the world. And why is that? Well, they've artificially created the demand that was missing. They have, normally demand would fall off if everyone loses their jobs and, the economy gets shut down. So instead of there being less demand, what did they do? They pumped out handouts left and right and, propped up all these consumers and gave them all kinds of aid and money and assistance and whatnot so that people could pretend like things were okay. And then what happened? Well, demand fell off a cliff because nobody was creating anything. Supply. So there's all these supply constraints because things were shut down and the government was just giving people money to spend instead of them creating value inside of an economy through goods or services. Therefore, you have now less goods and less services, and you have still the same amount of demand for those goods and services, although we did see some macro shifts taking place, like working from home, is going to change some things, or service industry being closed down is going to change some things, etc. So we saw some shifts inside of that environment, but essentially what we saw happen was we artificially propped up demand, while supply fell off a cliff, which caused, temporary inflation. Now, does that mean that prices are going to go back to cheap eventually? Well, probably if we go into a deflationary environment, but that does not mean all things are going to go back to cheap. We're probably never going to see food prices going back down to super cheap again. We're probably never going to see some prices come back down. It's going to be years before we have the semiconductors we need. It's going to be years before we have, the food and water and all this stuff that we need. But that does not mean that all this inflation is going to be permanent in things that are affected by the shortages. The majority of things are going to come back down like how lumber did, back down to a more reasonable level. Does it mean they're going to come back down to the cheapest they've ever been? Probably not. But they are going to come back down over time, because the fact of the matter is, even if everything just went back to normal tomorrow and we went back to 2019 and all of a sudden this thing was just bam, snap your fingers and it's gone. Okay, everybody, everything's good to go again. Start back up. Everybody go back to work. Everybody, go back to your jobs. Nothing else to be afraid of. Put your kids back in school. There's no more excuses for why you're not paying your rent or, why you can't go back to work anymore. There's no more excuse for, women can't work because of this. Minorities can't work because of this. People are afraid. People are unvaccinated. All the excuses are gone. And what happens? Well, nothing. It doesn't just go back to normal. Everything's not just booming again. It took us literally a decade from 2009 to 2019 to get up to this booming economy with this super low unemployment rate with, banging GDP. So we're just all of a sudden going to go back to that? No, it's going to take us another decade to rev back up and go. So more likely than not, we're probably going to suffer. We're probably going to see a deflationary or a stagflationary environment. And that's what I've been predicting for some time on the macro. But that doesn't mean this whole time I'm not going to invest along the way. I mean, that's just idiotic. You got to make as much money as you can so you're positioned. Who do you care about? Once again, do you care about being right, or do you care about being able to take care of yourself and your family? Because for me, I just want to do well for myself and my family, and though other people that I can help along the way through, whatever, sharing knowledge or charitable donations. But the fact of the matter is, I don't care if I'm right. I care about being successful in what we're doing here. So let's look at our different sectors and see what they're telling us. Material sector, got our breakout, hit our target, and then immediately just start selling off. Looks very weak. Looks very, very weak here. That looked like a reaction rally, in my opinion, which is not surprising, obviously. Communication, got a nice little pushback up here, trying to save this trend right now. We are seeing multiple drive after drive of bearish divergence, and now maybe potentially it's playing out, but overall looks like it's trying to save this cross. The last few times we did save the cross, so it looks like we're gonna probably do the same thing we've been doing. So consumer discretionary, XLY, we had a very strong resistance here. We came down from it once, and now here we have gotten the cross again. The last few times we got the cross, we saw very little follow through, but we did see quite a few times along this parabolic trend to the upside. We saw quite a few times when we got this cross and then we saved it. One time we came down to 200 exponential and simple, but now we'll see that we're starting to get closer and closer to it. So we're losing strength in this uptrend while we're putting in bearish divergence on our shorter time frames. So I think more likely than not, that there's a possibility we come back down here to like that 170 range. I would not be surprised. And we're seeing a loss of strength in our indicators and oscillators as well. So this is looking a little more on the weaker side or weak to neutral. XLE energy sector overall extremely weak. Very much underperformer. Now we are well below the 200 exponential and the slope has flipped over red, and we are below the 200 simple as well. While we still have a positive slope on this, this looks very toppy to me. We obviously have the 8 and 21 cross the downside, and now for the first time since this situation back here, since October 2020, or since our low back here in March of 2020, for the first time since that has taken place, we are now below the 200 simple. So this underperformed, had an absolutely pathetic move back to the upside, retested resistance exactly where we expected, and is now getting rejected. So what does that mean? Well, we're probably, in my opinion, going to come back down here and put in another higher low. We have a low back here, then we put in a higher low. We're most likely probably going to put in another higher low. Does that mean this thing is headed up to new all-time highs anytime soon? Probably not. We are well below the slope line now. We have a bunch of red histograms. We got the hard sell signal. We just crossed over the weekly 821. So again, I think we're very likely coming back down here to revisit these lows. Now, I do expect that we'll put in another in a series of higher lows. But, what does that mean? Well, it means we could come back down to 30 on this thing. Again, same situation taking place here, getting very clearly rejected off the 200 exponential moving average, absolutely perfectly. And now here we are below the 8 and 21, and it looks like they're getting ready to cross back to the downside. So I would not be surprised whatsoever to see this thing back down here in like the $30 range. Although I do think that after this cools down, after we get a slight rejection here of the bullish control zone, I do think this thing's going to show strength. We're coming off of a negative slope with a bunch of green histograms in a row, and now here the slope has flipped over blue. And while it is possible we get a false alarm signal like we did right here, I think more likely than not, we're going to come back down here, build strength, and then try to push back up. Do we get up to that 64 level? I don't know, but this is going to tell you a lot. What happens in the energy sector is going to tell us the look of the overall economy. Because if things are still speeding up and ramping back up, and we're going to all of a sudden just be a booming economy again, world economy, and GDP is going to be through the roof, we would expect energy prices to be going up as consumption picks up. But if all of a sudden we start slowing back down and there's not as much transportation, not as much shipping, not as many people driving around, not as many people flying, and the economy is going into a global cool down or deflation or stagflationary phase, I would expect energy to underperform. Although this is sort of a safety play too. So there's multiple factors that we need to pay attention to here. XLF, financial, looks mediocre. Still a decent ways above the 200 exponential on simple. Went through a nice consolidation period here and then stabbed up to a new high. If we look at this on a little longer of a time frame here, get a little clearer of a picture. We did put in a new high slightly above here, and we put in a much lower high on our indicator oscillators here. So what does that look like? It looks like bearish divergence on the weekly. Do we have to get a third drive before it sells off? No. But I would expect this to get picked up somewhere around like this $36 range and then attempt to push back up at least one more time before this sells off. But it does look very weak on the longer time frames. And obviously, you guys know my macro view on financial. Part of the reason I like crypto so much is because I think it's going to upset and dethrone the financial institutions. Not to mention, I think at some point in time, the Federal Reserve and the Treasury, are going to butt heads, and Janet Yellen is going to say, we want to just dump money into the consumer's hands because they need help. These poor people can't help themselves, so we got to give them the monies. Oh no. Everybody's a victim now. It's so fucking pathetic. So pathetic. And people are embracing this pathetic victim mentality. I can't speak for every country out there, and I know some people are struggling and life's hard and it's just not fair. But that's just because, you're buying into this victim mentality thing. The world should not need governments. Every country out there, the US is founded on basically like freedom and lack of government control and the ability to succeed, by working hard and quote unquote picking yourself up by the bootstraps. And yet here we are now falling into this just pathetic mentality of we need UBI and the government has to help us. And we just, it's not safe out there. We could die. Oh, it's so scary. Everyone's so scared. It's so fucking pathetic. Oh, It's so fucking pathetic. How it's crazy how the whole world went from, you know, independent and strong and powerful and, you know, rosy, sunny disposition and, you know, the future is bright, to just like, this is the end. Everyone's gonna die. Oh no. It's so fucking pathetic. I mean, it's actually kind of humorous just how weak people are, and how we're just breeding in this just weak mentality. But industrial sector, you know, we've been operating inside of this massive, massive channel forever. We've been hanging out in the top of the channel, and now here we are getting ready to test the center of the channel, the heart line. The last couple times we tested the heart line as resistance was back here in 2020, you know, and we bounced it and then finally broke through it. And then since then, it has acted as support over and over again. So when we do finally either go sideways long enough that we intersect it, or we sell off and get back down to it, I would expect once again to get a bounce off of that. Now, what we're paying attention to, though, is we see now the 200 exponential is actually losing its slope and going to go down below the 200 simple. So that's like the first sign of weakness typically. It doesn't mean we have to have a massive sell-off or anything, but typically, you know, that's one of the precursors that shows you that the market is losing strength. So, and then if we zoom way out on this bad boy and we see back another, you know, decade basically, back to the crash of 2008, in the industrial sector, what happened? Well, we operated in the top of this gigantic channel the entire time, and then we crashed down to the bottom of it. So we have the points from bottom to bottom, but in all reality, we're looking at the top as our resistance. So here we are, you know, close to that same area again. So I think if we bounce this heart line right here, if we, you know, break through this and do get a sell-off back down to the bottom of this channel, I think we'll find support around that $90 range and then shoot all the way back up to the top. So, but again, you know, overall, it just looks like more consolidation is going to take place here. We have gotten across to the downside. We are getting the hard sell signal. We do have red slope line and multiple red histograms. I think we're probably going to come back down below 100. But again, nothing crazy. It's already just been showing like weakness to sideways action. XLK technology retesting the highs right here, seeing some resistance, but I don't see any reason it wouldn't burst through the highs. We're seeing some very clear bearish diversions taking place. Very clear weakness taking place, but again, we're in the middle of a melt up, and I expect the melt up to continue taking place until right up until it doesn't. XLP, consumer staples, again, basically just retesting those highs again. Very powerful candle. Everyone was getting extremely bearish. This is it. It's over. It's going to melt down. We're done. No, it's not. It's not going to. It's not going to melt down. Stop trying to call at the top every time we have a 0.5% or a 1% sell off. No, it's not. It's going to do the same thing. You know, maybe we come down here and retest the 200 exponential at some point in time in the future. But look, count up how many candles we didn't test the 200 exponential, and then you're just going to be right on the one that we do? Nah, probably not. Probably not. Let's wait till we see some actual weakness before we start claiming that this is the top. XLRE, real estate, new high. You know, again, same thing. Everybody starts getting extremely bearish. Well, we broke out from a key level and we retested that level, and now we expect continuation to the upside. We've seen some very clear correspondence, interactions to the upside, support and resistance of our Fibonacci levels. So, you know, essentially I expect us to push up to that 1.236, and then after that, resistance, and then burst up, and then we'll go to the 1.382, et cetera, et cetera. You know, real estate is not going to crash tomorrow. It's a lagging indicator. So if everything else starts crashing, by all means, we can start talking about real estate, but not yet. XLY, consumer discretionary, you know, at resistance, broke down through resistance. I don't like that weakness after we break out. Consolidated on top of it, and you know, I told you I expected us to break back down, retest these levels. We are getting closer and closer to the 200 exponential and simple moving average. I would expect a test of those in the near future, as we're probably going to run into some resistance here, and we are seeing 821 cross and weakness on the daily. So consumer discretionary, not looking particularly great, but also not looking terrible. XTN, transportation. Now this one is important because this is our leading indicator, one of the weakest sectors now, and very much paying attention to the fact that we broke down from this very clear channel that we're operating inside of. We retested the 200 exponential and simple here, had a pathetic bounce off of it, and now here we are getting ready to touch them as well. So I would expect eventually our next move to the downside to take place. I think this is probably topped out. macro and micro, there's a lot of reasons fundamentally and technically that's telling us this has in fact topped out. And if we're going to all of a sudden go into this boom and the market's just going to keep floating up and the world's just going to be, you know, all daisies and sunshine, transportation is not confirming that. And the fact of the matter is, you know, this is composed of all kinds of things, including like, you know, commercial and business travel in the form of, you know, rental cars and planes. And the fact of the matter is, international travel is way down and business travel is way down. And the truth is, we're probably never going to see those same levels of international travel because restrictions are going to last in different countries for years to come. And then, you know, as far as like, you know, business travel, we're never going to see those same levels again. People are just going to Zoom each other. Technology is here and it's here to stay. So while some people are still going to fly halfway across the world to shake hands, most people are just going to do it digitally over Zoom. So Jets is confirming. This looks like absolute total garbage. Not surprising. Did not even put in a all-time high. Hale looks like total garbage. Again, losing the 200 exponential and simple looks absolutely terrible. Confirming, you know, basically like smaller portions of the market. UPS looks terrible. You know, got a key breakdown here, trying to find some support. Looks like it's going to get rejected. If we see some kind of divergence taking place and, you know, see some kind of reaction rally, maybe, I think more likely than not, we have two massive gaps. We have a big gap up here at 209 and we have a big gap down here at 179. So we're at 193 right now and it looks like it's weak. So I think it's more likely we come back down and retest 179 first, but we could easily get a powerful move back up here to 209. I think the best play right now is the gap play on this one. UPS, terrible. FedEx, even worse, below the 200 exponential moving average and just absolutely rolling over. Once again, we saw the 200 exponential cross under the 200 simple. We still floated up here slightly higher, but now here we are. You know, it was basically just telling us, get ready because here comes the weakness. And then after that, just showing continual weakness, breakdown of key levels, and now we're getting ready. We have officially lost the slope on the 200 exponential and simple now. This thing is, as far as I'm concerned, entering into a bear market, and we could see targets down here as low as, you know, over time, 179 or potentially as low as 108. So, you know, is this thing about to lose over 50% of its value? Well, according to technical analysis, yes. U.S. oil looking weak here. This is WTI crude. You know, basically got our little top out here exactly perfectly at our key Fibonacci level. And now here we are selling off. We're at 200 exponential and simple. I would expect a dead cat bounce up to like 66.46, at which point in time, maybe we get rejected. This starts looking like a head and shoulders, something like that. I think at some point in time, we're coming back down to like the 50s. It's possible we don't get there, but I think realistically, between $50 and $100 right now is what's going to happen with this. I think 50s are low end target. I think 100s are high end target, and I think we're going to bounce around that range. Overall, underperformer. We're at extremely low levels on our indicator oscillators though, so I do expect at least some sort of temporary bounce right here before a continuation, sort of a bearish consolidation, and then continuation. So let's take a quick break and I will jump back and chat when I get back, and then we'll keep rolling with our next asset classes. Oh, excuse me. Sorry, I unmuted that just a second too soon. For those just tuning in, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Let's just keep ripping on through these assets. Let's jump over to Tech and Friends next. So Tesla looking very weak right here. Basically has been just hanging on hanging around to the 200 simple moving average. We see that same weakness once the 200 exponential crossed underneath. We do still have positive slope on both those. We did get a bounce and a version of the 821 cross to the downside, but now here we are below them again, getting ready to cross back to the downside. This looks very, very weak. We have a high, we have a lower high, and now here it looks like we're putting in a lower high. It looks like a giant descending triangle, and it looks like we are eventually going to break down from these levels, and Tesla is going to get absolutely shellacked. So all the people out there that are like, but the robots and the smart driving technology because of the Tesla, oh, you sure it's not already priced in? Because the chart looks like shit. And I do love me some Tesla, but not at these valuations. Looks like crap. Uber. So yeah, we saw that breakdown on Uber. We lost a key level right here, and I'm still expecting more further downside targets. We have a clear target down here at like 35 bucks, and then after that, like high 20s, low 30s. I'm expecting that. We're well below the 200 exponential. It has a negative slope now, and now here we are well below the 200 simple, well below 200 simple, and the slope is almost flat, at which point in time it looks like this thing is going to powerfully roll over, and we're going to officially enter into a bear market on Uber very, very soon here. When I say officially, I mean the way I calculate it. You can use, whatever you want. I have a very defined, very clear, very consistent way that I do technical analysis. Most people cannot ever actually define how they determine a bull market and a bear market, so it's useless in my opinion. If you can't clearly define your parameters, then what is the point of having those parameters? Because everyone knows how the human mind thinks. You're going to slowly but surely just bend the line or move the goalpost or whatever until finally, you capitulate because you're wrong or whatever. So very clear. You need to have very clear and definable levels and ways to determine these things. So you don't have to agree with mine, but the fact of the matter is, you see I consistently use the same thing to determine bull market and bear market. I can clearly define a macro trend and a micro trend on multiple time frames based on my moving averages. So being able to do that tells me, without even looking at what the title of the chart is or what asset class I'm looking at, whether or not this should be bullish or not. So here we have broken down on Pinterest from those key levels, and now here we're paying attention to, we now have officially lost the slope on the 200 exponential and simple. We are very clearly now entered into a bear market after making some very nice gains on Pinterest and some nice scalps along the way. I do expect our next target to be down here at the bottom of the range. We're very close to some of these key levels, but in all reality, with the confirmation of what amounts to a bear market, I do expect some serious continuation to the downside. So it becomes less and less valuable to start like scalping back to the upside, as obviously I like to trade with the trend in the direction of the predominant movements. Therefore, we can capitalize on the direction of the trend without overworking ourselves trying to fight the current. Wish down here perfectly hit our level. So when we were back up here, we were talking about how we didn't think this was going to bottom out using our Fibonacci extensions and the key levels that we were able to identify on the chart. And now here we have gotten the perfect sell-off. We came down here and literally touched the 2.618 and what I think is going to be the bottom of this trend. Now, I'm not going to just jump right into this thing, assuming that it's going to push back up, but I do expect a retest of 798 or potentially as high as $9 sometime in the very near future. But I do want to see this start to carve out some kind of like lower time frame bottom. But again, that's just further proof that the way I do technical analysis and using these key levels and direction of the trend works, as we were able to identify a bottom way before it ever took place, literally to a T. Now, does that mean that it can't get down here to our next Fibonacci extension? Nope, and that's what we're waiting to make sure, because we're not trying to catch a falling knife, but a lot of times I will take a scalp or I'll take a little stab at a position based on those levels. So I could have easily taken a scalp right there and made whatever 5 or 10% off that. But again, there's a lot of juicy looking stuff here. And in my opinion, we're at a decision point in the market. So it's less important to make short-term gains. Plus, if you look at how we did this year in the last like 8 months plus, we've absolutely destroyed the markets this year. I mean, we have bent the markets over and took everything that belonged to us and more, including, crypto, traditional stocks. I mean, everything has just gotten absolutely beaten down by us. We're brutalizing these markets. So to even worry about the last 4 months, we could literally just take the next 4 months off and come back January next year and go from there. And I would be completely happy with that. And we would have outperformed anybody or anyone, any fund, anything like that. So absolutely unnecessary to take, crazy risks or anything. At this point in time, are you just trading just to trade or trading to make a little extra icing on the cake, whatever? For me, I'm just looking for perfect opportunities, perfect setups, and then I'm just taking the easy money, extracting it from the market like the syringe, just stabbing it in to the vein and just sucking the life out of this thing. And you know what? If the vein's not big and throbbing and evident, I'm not even going to pull out the syringe and get ready for it. So Airbnb, absolutely just getting destroyed. Looks very, very weak. Got rejected at that same level again. Looks like it's coming back down to the bottom. At this point in time, we have a very clear channel that this has been operating inside of. We have 2 touches on the bottom and 100 touches on the top. So again, I expect it to come back down here to the bottom of the range around 130. We'll pay attention. Looks like it's very clearly losing momentum. Possibly this time it comes down. The third time, a lot of times it will come down and break through. So if it does, I expect it back down at that $120 range. And at this point in time, it's all selling pressure. No one has made any money on Airbnb. Vodafone looks weak, but it did cross back to the upside here. We are seeing a little bit of strength. You could easily take a little scalpy scalp up to like 1738, maybe up to like 1773. I'm not really interested in it right now. I do have this trade set up in place, but again, it's not juicy enough. I only want that juicy fruit. Bumble, back down here at the bottom of the range. Looks like it wants to let go right here. Looks very weak. Could it push back up to 57 again? Sure, another 20% to the upside, but looks very weak. I think this thing wants to break down. Baidu, China in general looks very, very weak. Broke down from key level. It could easily find support here and push back up. If it starts to show some strength, I might be interested in again, but on longer time frames, it looks absolutely horrendous. And I think 112 is, it's all but inevitable at this point in time. Very, very weak. Lost to 200 exponential, and it is very, very clearly red slope to the downside. 200 simple is about to break down as well. Longer time frames looks terrible. Alibaba looks absolutely horrendous. Almost to our measure move target. Very clearly has hit our initial target area almost perfectly. We could take a stab at it right now if we wanted to, but this is what we talk about, how a lot of times people get psyched out by the Fibonacci levels because they're looking at just this Fibonacci to here, and then in all actuality, we should be looking at the Fibonacci for like the entire trend. So this thing could easily just keep getting just absolutely destroyed. And as long as like the CCP is just, basically smacking these things down, no reason to jump in and try to call the bottoms. I would much rather trade into the momentum with the direction of the trend. And right now the trend is down. There's no reason to be just jumping in on these, in my opinion. Tencent looks absolutely terrible. Already sold off over 50%. Next target 618. I think it very likely gets down here to 387. I would not be surprised to see this thing just getting absolutely wrecked. We are at some key support levels, but at this point in time, it's just like chewing through support left and right. 200 exponential and simple, both angled to the downside. The weekly and monthly charts look absolutely terrible. Diddy got rejected at the exact level after the breakdown, gap close, and now here it is just bled out. It has literally had its throat slit, and it's just bleeding out like a Kill Bill movie, just squirting its life force into the environment. And soon, everyone that's ever bought into this thing will be negative, as the only thing this has is selling pressure above its head. Let's just for a little visual representation, let's see where it came out here and then where it's at now. Everyone that has ever participated in this stock ever in all of its existence, publicly traded, is underwater except for this guy right here. This little itty bitty guy right there that purchased, and then there's a tiny little bit you could have purchased right here. Otherwise, everyone else is a loser. So what does that mean? It means this stock is a loser. It's total trash. There's no reason to try to pick the bottom on this because this trash is just going to bleed out. Kanzun Limited, BZ, looks terrible. Came back up, retested support, breakdown from it. We'll see what happens when it gets back down to these levels. Again, this one has had its throat slit and it's getting ready to bleed out. It just hasn't finished yet. Neo looks much stronger, but now has lost the 200 exponential. The slope of the 200 simple is still blue and to the upside, but it's just getting weaker and weaker and weaker. And then eventually this thing is just going to flow out like a waterfall and just absolutely dump. Remember, this company was completely bankrupt at like $1 not too long ago, and the CCP stepped in, and now it ran from $1 up to $70. So, you know, is it going to lose $69 and go back to $1? No. But could it easily lose from 36 down here way back down to like 18 or something, or 5? It sure could. So, you know, do I think it's likely to get back down to 5? Probably not. Is it possible? 100%. So no reason to try to jump back in on this one. I think it's probably going to be at like $15 very soon. EDU, the New Oriental Education Technology Group, Inc. Incorporated. Looks very weak. I mean, it's literally just bleeding out after that massive gap down. And you know what? I don't see any policy shifts anytime soon. The CCP is saying now they're going to redistribute wealth. You can no longer like pay to educate your children better than other people. You can have as many kids as you want. You know, they're basically just, I mean, it's mass control. So all of a sudden, are they just going to change their mind and this thing's just going to go parabolic? I doubt it. This is a dead asset to me until something changes. TSM, Taiwan Semiconductors, not looking good for them. You know, we're at that support level right now. Giant descending triangle below the 200 exponential and simple. 200 exponential has flipped over. This is the move we've been talking about. It's been expected for some time. I think before long, this will be at $83 if it even exists, if Taiwan even exists. Especially now, I'm sure all the adversaries of the United States are literally just going to get delusions of grandeur now that, you know, we got defeated basically by primitives in Afghanistan and they ran us out of their country. Whether you believe that's the right thing or the wrong thing, the fact of the matter is it's going to destabilize the world and it's going to destabilize other countries that are our allies. And if I was Taiwan right now, I'd be real scared because at least we had troops helping to defend Afghanistan. We don't have anything in Taiwan. No one's going to protect them. If China decides they want to just go to war, I mean, I don't even think Biden knows where he's at, let alone what decisions to make. So, and the last thing I think that people want right now is to just enter into another war, especially one with China. Because if we go to war with China, we won't have any stuff to buy. So all the money in the world won't matter because we don't make anything. We literally just buy it all from China and Taiwan. So if China owns Taiwan and then China says you can't buy our stuff anymore, we will literally have nowhere to even spend our useless dollars. So Intel looks absolutely terrible. Triple bearish divergence on multiple time frames in a space that's full of overperformers, and semiconductors are in mass shortage. This thing is probably going to look terrible for the next like 3 years. Maybe once they have a new factory and they're actually like making stuff again and they have some new chips, maybe in like 2 or 3 years it will be valuable. But right now there's a reason this has not made a new high since 2000, and I don't expect it to make one anytime soon. It's absolute trash. It's a trash company. It's garbage. It just has a name that people still like, and it's cheap, but it's cheap for a reason, because it doesn't have any value or very little value. We have lost the 200 exponential. We have lost the 200 simple. The 200 exponential is curved to the downside. 200 simple is barely hanging on. This looks absolutely terrible. You know, we're very close to retesting the key level at $50. After that, I expect to retest at $45. And eventually, I expect this bearish divergence on longer time frames to play out and Intel to just absolutely capitulate back down into the 30s. This looks terrible. One of the worst charts. One of literally the worst charts in the stock market. This is like the micro strategy of semiconductors. It is absolute garbage, because no matter how good you say it's done, it still has not made a new all-time high since 2000, the same way as MicroStrategy. Total garbage. Nvidia up here, absolute opposite. Just absolutely crushing it. Absolutely destroying the markets, holding them down and punching them in the face. Full mount has been achieved, and the referee is about to stop the fight for the semiconductor space because Nvidia is just beating them to death. At recent all-time highs and headed much higher. Even though we have some very clear bearish divergence taking place, I don't see any reason this doesn't amount to a bullish consolidation, and then literally this thing just takes off. I think Nvidia is just destroying everyone, all its competitors. AMD, aside from this crazy little Reddit thing right here, there's no way to tell the actual valuation of AMD anymore. It took forever to come back up here and retest the highs. It broke through, became a meme stock, and now technical analysis is much less functional. It looks very weak right now. The problem with these like meme squeezes is afterwards it makes it very difficult to determine the actual value. So if we just ignore this stuff right here, I would expect it to come back down and retest the breakout level of like $100, at which point in time maybe you can start to derive value for it again. Overall, AMD looks good, but again, it's very hard to do functional technical analysis after something becomes a meme. ARK, ARKK, total trash. Kathy Wood's most recent interview, total trash. Her fighting with Michael Burry, it's literally the most juvenile thing you can ever say, is that when someone disagrees with you, that they don't understand. Like her coming out and saying, well, you just don't understand technology and innovation. You just don't get it. Okay, explain it to the man. He's obviously famous and he's very intelligent. So why don't you, Kathy Wood, spend your time explaining to Michael Burry why these things are good and they're not overvalued? Instead, what does she just say? Well, I don't think we're in a bubble. You don't, Kathy? You don't? Your fund increased by 5x this year and has gone sideways to down? No, you just don't care because you're taking active management fees based on the inflows into your funds. So you're getting paid millions, tens of millions, hundreds of millions of dollars to lose everyone else's money. So of course you're going to say, well, I don't think we're in a bubble. We're below the 200 exponential. We're below the 200 simple. And anyone that has ever bought ARK in the year 2021 is negative on their position or flat at best, with the exception of a couple little stabs down here. So, and it looks absolutely pathetic. Looks like it's just rolling over. ARK looks like it's just getting ready to go into a multi-year sideways to downtrend. So, but it's innovation and you just don't get it. You don't get it. Okay. Okay, Kathy. Okay, Queen Kathy. ARK F looks even worse. Same exact thing. Total trash. 5 years from now, I'm sure it will be different, but I will buy the bottom. I'm not going to buy the top like all these idiots. I mean, when your fund increases in value 5x and then goes sideways and all you do is like lose money, it tells you that you're just doing something wrong here. You are not a trader and you invested in a cycle that has already played out. So go take 2 years off and then come back and maybe you can start with your same bullshit again. Skills, SKLZ, literally lost all its value, completely sold off. Perfect example of a total trash bag, useless investment. Let's look at this. Everyone that has ever purchased this, except for this tiny little sliver back here and like one little poke right there, is literally upside down in their position. This is all overhead selling pressure. This is there's literally an infinite amount of sellers. So anybody that buys literally has to fight the entire rest of the market. Everyone that has ever invested in skills is literally going to try to take a dump on your face. So good luck swimming through the never-ending dumps on your attempt to try to ever get back up to a positive price. So skills looks absolutely terrible. Total garbage. Total garbage. Teladoc looks bad. 200 exponential and simple have completely rolled over to the downside. Both have negative slopes. We have lost key support. Here we are trying to hang on to this next little key support level right here. Next target to the downside, $114. After that, 88. Looks absolutely terrible. Full on bear market. Palantir, above the 200 exponential and has flipped the slope back to the upside. Got rejected off the 200 simple right here. Bought gold, so at least it has something going for it. But as far as I'm concerned, this thing is just chopping sideways. And, if it continues to just chop sideways, it's going to just dump. It had a nice, powerful run up here. Found some support. And now it's just putting in lower highs. It really, really needs to get up and take out $27. Showing extreme weakness. Very powerful knife stab to the upside. And it's not gaining any momentum. So, looks terrible. Probably coming back down here to fill this itty bitty gap at $23. And when it does, just going to chop sideways between these moving averages. Looks terrible. Not as bad as some of the others, but terrible. Corsair, absolutely terrible. Did exactly what we said. Came up here, got rejected off that key level. Going to continue selling off. Next target to downside, $23. 200 exponential is already rolled over. 200 simple looks very close. This thing is going to get absolutely shellacked. I mean, $23 and then probably $18.50 looks like garbage. Good products, though. Good products. I like them. This stream was brought to you by Corsair. Well, not like a paid sponsor, but because I have parts in my computer from them. So they obviously make some good stuff. Unity, again, showing that strength above the 200 exponential and simple now. Flip the slopes back to the upside. Powerful candle off the retest right here. Looks like it wants to come back up and retest the 618. After that, possibly come back up here as high as, looks like it wants to come up in like the 140 range. So seeing a little bit of weakness here, but overall gaining momentum back to the upside. Unity looks good. Zillow looks absolutely terrible. 200 exponential has rolled over. Red slope. 200 simple is very close. We got rejected off of them. It looks like this thing just wants to let go. 8 and 21 across to the downside. Looks absolutely terrible. I think we get down here to 85, 86 very soon. And then after that, potentially 65. Stair step our way down. Zillow looks like trash. Trash. While the housing market is making like all-time highs, Zillow is getting wrecked. Definitely no bubbles to see here. Definitely not any bubbles deflating here. Right in front of our eyes on all these charts. Zoom, same thing. Trash. Sold down below the 200 exponential and simple. We now have a negative slope on the 200 simple, a negative slope on the 200 exponential, and this thing looks like it's about to just... Zoom is about to become the mayor of Wreck City up in this bitch, because it is about to just get absolutely destroyed. Ran up from ridiculous levels once it crossed above the 200 exponential and simple back here at $80. Ran all the way up to a ridiculous valuation of $600, and now it is just getting absolutely crushed. It has, pay attention here, sold off to the 200 exponential, put in a lower high, sold off below the 200 moving averages, came up and got rejected off of the 200 simple, rejected off of the 200 simple, and now it's selling off. Officially has entered into a bear market. Zoom is officially in a bear market, and what does that mean? It means it's going to be going down probably for a while and probably much lower. Square got the move back up here to the side, to the top of the channel, just chopping sideways, chopping it up. Comes back down here to the heart line and the 200 exponential and simple again. Eventually that breaks, probably coming down to like 191. Square looks like trash. I think crypto is probably helping to prop this up for now. PayPal, same thing, retested a high and then just got shellacked after that. Again, just getting rejected off the 618. I think it's headed down here to the 0.5 at 262. After that, 382, 200 exponential on simple moving averages. Looks weak. Probably retested 200 exponential and simple and then bounces them. It's getting a hard buy signal. Definitely could find some support right here, but this is just an awkward range for it to find a push up. If it does, what happens? Does it come back up here and retest the highs? Probably. Could easily come back up to like 310, but it's going to be tough to break out. eBay got a nice powerful move up here, consolidating. Looks strong, stronger than most. Hard buy signal at top of the range. We'll see what's going on here going into like the holiday season. I would expect eBay to do extremely well. And then, you know, depending on what happens with like the actual like quote unquote actual economy and, you know, what kind of stimmies the government can drum up and the Fed can drum up and everything. I mean, people just keep buying stuff, and I think eBay will absolutely crush it. Why does the eBay chart look so good and Amazon chart look so shitty? Probably a bubble. Snapchat looks like it's just getting rejected here at the 821 cross. I expect it to come back down here unless they left a massive gap at $63, and I think very soon it will come down here and close that gap, at which point in time I expect it will find support and then try to chop up higher. I don't think the kids, I think if anything, Snapchat will probably do even better because people will like stop using OnlyFans now that they can't buy their pornos on OnlyFans, and they'll have to go back to like paid Snapchat or whatever. Whatever you kids are doing on Snapchat, cut it out. You're out of control, you little perverts. Apple just getting rejected at these levels, losing a key support level, and looks like it wants to roll over. One of the strongest stocks and clearly propping up the markets, but starting to show some weakness. Amazon just bleeding out as expected after that gap down here, well below the 200 exponential, lost the slope. 200 simple looks weak. We're at the heart line now. I expect this thing to, I would expect some kind of dead cat bounce here, but But if it can't reverse the trend back up to like 33, I would expect it to end up very shortly down here at 28.69. Operating inside of a channel, this looks like Wyckoff distribution throwover, at which point in time we will continue to sell off, push back up, LPSY, last point of supply, sell back down, lose our resistance, support rather, comes back up as resistance, and then gets rejected and just dumps. I guess, I don't even know. I guess people just aren't using Amazon anymore, probably because Jeff Bezos is a prick and he's spending millions of dollars to go to space, and it makes people mad while there's like horrible things going on outside the world. He's like burning through millions on rockets. So maybe people are just like not into Jeff Bezos and Amazon anymore. It was probably that statement he said, "Thank you to all my customers and employees that made it possible for me to waste millions of dollars going to space. Hooray!" That's like probably the biggest, most dense asshole thing you could say in the middle of a global pandemic that's killed like millions of people and destroyed the entire economy. You're like, "Guys, I'm going to space and I couldn't have done it without your money." But that just shows you how ignorant he is. I mean, he needs like some kind of like PR team or something to be like, "Hey, Jeff, I don't think it's a good idea for you to be a prick to everybody." He's like, "I'm not being a prick. I'm saying thank you." Fucking ridiculous. Facebook propping up the market, holding it up here, staying strong, below the 8 and 21, but I mean, it's a little ways away from the 200 exponential and simple. Maybe just chop sideways for a little bit. Maybe it comes down for a retest, but overall looks strong. You know, this is one of the winners for sure here. Alphabet, Google, again, same thing, very strong. Retest that area, saved it well above the 200 exponential and simple, and has not revisited those levels since September of 2020. I don't expect it to do it anytime soon, and before it does, I expect it to have another one of these little parabolic pushes up here. It's showing a little bit of weakness, but you know what? Everything else is weaker, so even when these things show some weakness, I expect them to keep just grinding up, because they're the only thing that's a winner. In a world full of losers, Google is probably, Google and Microsoft, probably top winners. Netflix looks like total trash. Had a nice move up here off the heartline, off the 200 exponential and simple moving average as expected. I expected to just get rejected up here at the same level again and just continue chopping around inside this range. It has literally done nothing since July of last year. Spent over a year just chopping around during the best possible environment for it ever. So at this point in time, it looks like eventually it's going to break down from here and just get absolutely destroyed. Netflix is garbage, obviously. Well, the chart, Microsoft crushing it. Nice little gap up right here. I expect it to continue crushing it. Yeah, looks great. Probably one of the best charts in existence right now. Traditional markets. Absolutely crushing it. Absolutely crushing it. Let's look at our commodities next and just keep ripping. Gold looks terrible. Below the 200 exponential and simple. Both have a negative slope. Had that little sell-off right here. And that was the bottom. We put in a hammer candle and now we're going to the moon. Oh, no, we're not. Going to get rejected. Come back down here to those same levels. Eventually going to lose that area. Looks terrible. All the Palantirs in the world can't prop up gold's price. All the gold bugs in the world can't make it go up. Sorry, guys. Derivatives are much stronger than your buying pressure. Silver looks even worse. Terrible. Well below the 200 exponential and simple. The slope has flipped to the downside. Here we are back down at $22 as expected, as I've been saying for some time. And very soon it's going to lose that level and it's going to come back down here to $20. And all the silverbacks in the world are going to capitulate and they're all going to cry because silver's really worth $50. It's worth $200. Silver's worth $1,200. Silver to the moon. Sure, guys. Sure. Keep it up. Keep it up. Hopes and dreams. And you're going to get crushed. And then I'm going to buy all your silver from you at like $17. And then one day in like 20 years, it will go to $50. But, well, maybe 5 years. But by then you will all have capitulated. You will have traded in your silver for cryptocurrencies that were overvalued. So you will get crushed on silver on the way down. You'll trade it into cryptocurrency and then you'll get crushed by cryptocurrency on the way down. And then you'll give up on investing and you will forever live in your mom's basement, unfortunately. Gold silver ratio, as expected, going parabolic. 100% as expected. We are below the 200 exponential on simple. I think we come up here, overshoot it, and then get rejected somewhere around the 90 range. Seeing this coming for a long time. There was very clear bullish divergence taking place on the weekly. Crossed the 821 back to the upside. Blue slope, all green histograms. Powerful trend to the upside on the stochastics. Once again, 100% called this. What did we say the whole time? Gold's either going to go sideways to down and silver's going to go down faster, or gold's going to break out to the upside and silver's going to underperform. And typically, when gold and silver move to the upside, silver is a exponential play on gold in a positive manner or a negative manner. So this chart was telling us gold was going to gain value in comparison to silver well before we knew the direction of gold or silver. So what does that mean? We used this chart to determine that gold was going to be going down and silver is going to be going down faster, and now look, we're right. So that's why it's so important to zoom out, put your bias aside, and then use what the charts are actually telling you and different resources, because the whole world was talking about gold and silver going to the moon. XPT, platinum, dead cat bounce, double bottom right here. I think it's going to continue to just sell off and bleed out. Complete underperformer. This looks like a reaction rally off the 382. I think we're going to be back down here in the 800s as expected very soon. We could see some kind of uptrend pushback here, but we've lost the 200 exponential and it's sloped to the downside, and the 200 simple looks like it's getting ready to do the same thing. AG, First Majestic looks very weak, putting in a new low. I expect it to continue just dumping well below 200 exponential, 200 simple, rolling over to the downside. Looks terrible. Miners are going to get absolutely crushed. Silver Juniors looks much, much worse, exponentially worse. Already lost the 200 exponential and simple, already got rejected. Everything pointing down on these. Silver Junior miners are just going to get absolutely destroyed. And they've already been getting destroyed. So they're going to continue getting destroyed even worse. USAS, I mean, just absolutely pouring out, just dumping. Took out the low down here. I mean, this thing just looks like trash. USAS going down to 81 cents, maybe 65 cents. I mean, absolute destruction. Complete miss on earnings. Total trash. Total trash. Tilray, hanging on to these levels for now. Hanging on to support for now. But looking very, very weak. Well below the 200 exponential and simple. 200 exponential has already lost the slope. It did lose it once back here and then push back up. But looks bearish. Pot stocks look like shit. The whole sector looks just like complete trash. They're trying to spin it that it's going to get legalized in the U.S. I don't know if you've ever heard of the government, but government takes years and years and years to do anything. So maybe in like 5 years, 3 years, if we're lucky. No. Sorry, guys. Trash. ACB, Aurora Cannabis, terrible. Back down here, retesting the lows. Pathetic underperformer. 200 exponential barely ever even rolled back to the upside. 200 simple is still technically sloped to the upside, but just looks like it's going to get absolutely crushed. Going back down to like $5. Total garbage. Total garbage. Canopy Growth getting absolutely destroyed. By far the worst. By far the worst. 200 exponential and simple, both angled to the downside right now. This thing is just rolling over, pouring out. It's just pissing away its value day after day after day. See you back down in the 13 range. After that, I mean, are you even going to be in double digits in a month? I don't even know. Probably not. Uranium space just getting destroyed. URA below the 200 exponential and simple, getting rejected here. 200 exponential is already rolling over. This thing's just bleeding out. I'll see you back down here in the low teens. Uranium play, beat down. All the late joiners to the uranium party, sorry. Sorry about your luck. Sorry that we just had you hold our bags while it just dumps. We'll meet you at the bottom, and I'll be glad to take those off your hands at like half the price. UEC getting absolutely destroyed. 200 exponential rolling down. 200 simple looks like trash. Maybe find some kind of higher low support up here. I mean, I don't even know. Is this thing going to $1? Probably soon. We'll see. It should stair step its way, but total trash. CCJ, same thing, below 200 exponential and simple, rolling over. It was very clear when it lost our channel of support right here. The measure move is almost played out. Absolutely just getting destroyed. URA, UEC, CCJ, anything that has anything to do with uranium, just expect it to just bleed out over the next couple of years. URNM, just destroyed. Breaking down from key level, 200 exponential and simple. Bears are in control. just absolutely just dumping all over the bulls' faces. There's nothing the bulls can do about it. They're literally dying at the bears' mercy. CPER, again, topped out very clearly, lost our channel of support in the middle of our play. I mean, all expected completely. 200 exponential and simple acting as temporary support. I expect another higher low, and then eventually it'll move down to like $22 or $21. Copper getting destroyed after a massive run up. If you were late to the copper party, at least be ready for the next rally when that happens. But sorry about your luck. Sorry about your luck for all these. If you were late to the commodity party, sorry. I mean, no one is ever bullish on commodities ever for literally decades. So when everyone's bullish on commodities, you probably missed the boat. LIT, lithium, nice run up here. Topped out at the 1.5. Trying to find some kind of support here. This looks like it's very close to just breaking down. This might be done. One of the better charts, but now it's starting to look very weak. Looks like we're about to lose this. And when we do, could have a massive pullback after just great gains. HYDR, hydrogen ETF, looks terrible. Back down here, retesting the lows. I expect this to just keep bleeding out. It's nowhere near to carving in a bottom. At least it's not showing me anything for now. LBS1, lumber futures. I mean, terrible. Just bleeding out slowly but surely. On our way to the next target of 383. Lumber back down in the 300s. That's impossible. Yeah, I wouldn't rule it out just yet. Could we be bottoming right now? We are seeing the slope flip over blue right here. You know, this is a very key support level right here. So could you take a educated guess and a stab at lumber for a nice pushback up to the upside? I mean, it's not going to go to zero. We know that. So, but it definitely got overpriced. So it can easily sell off. Like, I mean, but a 40% push to the upside could very easily be, you know, there could definitely be a trade set up here. Let's be real here. If we took a position off this level right now, it would be based off of the bullish divergence, triple bullish divergence taking place here, and multiple grain histograms, the flipping of the slope right there. You could definitely argue that there is a move to be had. Let's look at what we're paying attention to here. You know, we could easily say that there is potential in play for a 40% move to the upside. What are you going to take, a 20% downdraft? No, I think if we take out the low of that previous one right here and our key support right there, so we could put together easily like a 6 to 10% stop loss with 38% to the upside, 4 to 1 risk reward ratio, or with the 6% stop loss, 6 to 1 risk reward ratio. Lumber looks good. I got wood on this lumber chart. Caterpillar bleeding out as expected. Another lower high getting destroyed. Barely hanging on to key Fibonacci levels and the 200 exponential and simple. Once we broke down from our key level right here, it's doing exactly what's expected. But the infrastructure bill. Oh, but infrastructure. How about butt technicals? Chumps. John Deere bleeding out. Hanging on much better. But again, you know, agriculture, infrastructure, roads and bridges, farmlands. No. How about government, wasted monies, deflation? Nothing will ever get passed, and when it does, the money will get squandered and wasted. How about that? That's some legitimate arguments. Looks terrible. Coming back down here to $300. I have no interest in getting involved in these things. They typically go into like 40 to 50% drawdowns that last like for a year plus. So once we broke out of this key channel, trash. No, thank you. AM Antero Midstream broke down below 200 exponential and simple. Looks very weak. Getting a hard buy signal. But, you know, what does this look like to me? Well, oh, this is a buying opportunity because we're in a bull market. Well, maybe not. Maybe this is the shift between bull market and bear market. Perfect retest of the 618. Could we possibly come back up here and break to a new high? Yeah, it's possible, but honestly, it's hard to get bullish on any of this stuff. I think maybe this one has a reflex rally, but probably to a new lower high. CX, Cemex, same thing, infrastructure play. Probably going to end up down here at $7, 696. Could easily come back up here and put in a new like cycle high retest, but it looks like a breakdown from a key channel and then retest and then breakdown again. So looks weak. Steel play. These things have been holding on better than anything else. CLF and some of these other steel companies, but you know, they look like they've really topped out. once we broke down from that channel, you know, we got picked up right here one time. We got picked up right here one time. And then I literally said I expected this to push back up to a new high and then get rejected. And now it looks like that's exactly what it's doing. It looks like it wants to come down here like 1788 and retest these levels, at which point in time we can reevaluate for at least some kind of dead cat bounce. Speaking of dead cat bounces, Ford, the old F-bomb, same exact chart, just a couple weeks ahead, retested the breakdown on the channel, and now here it is at 200 exponential and simple. I would expect potential dead cat bounce. I don't think it gets back above like $14. I think it's more likely headed back down to the single digits. GM looks terrible, already below 200 exponential and simple, hitting that measure move very, very soon here. Could we push back up and try to test our support as resistance? Yeah, but this thing is rolling over. GM looks terrible. Oh, that's so weird. I'm sensing a pattern with all these charts. Hasbro, I mean, exactly what we said happened. It got that immense push up right here and then just bled out. Could not hold on to support. And now here we are back down, close the gap. Does it now get a move off 200 exponential and simple and then back to new highs? Maybe. It's possible. You could easily argue for a trade setup right here back to new highs. But I want to see carve out some kind of bottom right here. In actuality, it looks like the momentum is probably going to start picking up to the downside. We hit the 200 exponential and simple, got a pathetic move. Hit the 200 exponential and simple, got a slightly better move. And now here we are back down at 200 exponential and simple. So, I mean, I would expect some sort of like time frame where we don't just like see it every like couple weeks. If this thing was actually going to start performing. So why is it just coming back down to 200 exponential and simple? Well, reflex rallies. You know, people just buying the 200 exponential and simple until it fails, which is probably what's going to happen next time. Works, WORX. This thing has just gotten absolutely destroyed. Trying to carve out a bottom right here. But you know what? It looks pathetically weak. I would rather buy it off the 200 exponential and simple. Looks like it's trying to carve out a bottom though. Definitely showing some potential here. Sphere 3D Corp, same thing, just got absolutely wrecked. Trying to find some support at these tops right here. If it holds here long enough, maybe it carves out the bottom. But again, you know, this thing is just, it's one of the worst charts in existence. So, you know, no offense if you're the one who asked me to look at this. WTW, the old Weight Watchers, just bleeding out as expected, as discussed, as planned. I expect it to continue bleeding out. See you at like $17. Maybe one day the world will reopen and people will care about their physical forms and, you know, their gain in mass. But right now, I don't think people are interested. I think most people just want to stay home and just continue to fistful Oreos and never go back to work and not wear pants and just do their streams in, you know, the new world. And once Elon has the new robots, I think probably Weight Watchers goes out of business and the average person gains another 100 pounds because the robot can just go buy us groceries and we don't ever have to leave our houses anymore and we can all just get fat and rot away in our computer chairs while we stream on Zoom and play video games or whatever the hell people do these days. 200 exponential and simple, rolling over. Weight Watchers looks like it's about to go out of business. Walmart doing good. I mean, it got absolutely shellacked back here from December 2020. Lost a substantial amount of its value and has just been going absolutely parabolic. Almost hit our target to the upside. Will it get up there and put in a new high? I don't know. Probably at least going to retest it. Probably going to get rejected. It looks much stronger than most, but I just don't know if this is going to new all-time highs off this little rally. And if it does, I expect it to get rejected. And then we got to see, does it come down here and, you know, continue this little like higher low, you know, trend that's been going on? Probably. I think, you know, if you didn't get an opportunity to buy it already, I think you wait for this move to play out and then you pick it back up at like 142 off the retest of our resistance, which would, you know, theoretically turn support. So I think it's headed back down there. There's definitely more downside potential than upside at this point in time, in my opinion. So let's jump into our cryptos. What up, Spike? Good to see you, my man. Crypto Connect. So showing some strength coming into our close today and obviously pushing up here to new highs for this little mini cycle. You know, very close to retesting those key levels we were discussing. Up here at like 52,000. Obviously sold off and saw some weakness at like the 50,000 range over the weekend. But trying to push up here. Potentially showing not as much on the futures chart, But on our regular chart, we are seeing some bearish divergence starting to take place. Again, we have our first drive here, second drive here, and now we're pushing up for our third drive. Let's see what happens here. We are still above the 200 exponential and simple. They are still angled to the upside, and we're starting to potentially invalidate that theory that we are going to be selling back off here. But again, let's keep in mind that we are at key resistance right here. I have taken profits on a portion of my position once again. I still have a portion of the position open for now. So while I am overall still bullish, with my position, because I got in at a much lower level at the 821 crossback here at I got in at like 30,600. I am not bullish on crypto right now. My position is still bullish. I'm in it from a much lower level, but until we invalidate what has happened every time, which is this fake attempt to get back up here, I'm not going to flip back over bullish. I would much rather purchase back into these cryptos at a higher price. I think there's limited upside potential at this point in time. I still expect crypto to top out somewhere between 50 and 52,000. We are also seeing triple bearish divergence taking place, double bearish divergence taking place on some of our other indicator oscillators. That could easily be invalidated, but let's keep in mind, we saw triple bearish divergence and then a massive sell-off. We saw triple bullish divergence and then a massive pushback up. So seeing triple bearish divergence again on the daily starting to show up tells me there's a high likelihood that we are going to get rejected and sell off here. Could we invalidate that bearish divergence? Yes. But again, the market is telling us something, and I am listening. Not to the moon boys. I'm listening to the actual market and what it's telling me. And what does bearish divergence tell us or bullish divergence tell us? It tells us the current trend is unsustainable. And then also the volume is just absolutely pathetic. I mean, look at this volume. Pathetic. Pathetic. I mean, there's literally no volume. We're done. We can take a trend line and we can draw it from here, and it's literally just dying off while price floats to the upside while we put in bearish divergence. What does that tell you? It literally tells you that this thing is going to dump. Does it get back up to 52,000 before then, or 54,000? Sure, whatever it takes to get the bulltards excited again before the market just dumps on their faces and then we go into a year-long bear market. So don't get me wrong. Love me some crypto. Love me the gains off of crypto. But the market is telling us, hello, McFly. Ethereum, chopping around sideways. Very weak right now compared to Bitcoin. Very weak. It's showing so much weakness taking place right here. Absolutely terrible. And then when we look at the ETH Bitcoin chart, we tried to break out of this descending triangle. We tried to break out of this channel. And now here we are back down at the top of the channel. What should act now as support. We'll have to see what it does. But we have just crossed now the 821 back to the downside. And every other time we've crossed it to the downside, we saw a massive sell-off. So what does that tell us? Bitcoin's about to go parabolic and ETH's just going to kind of go sideways or up weekly, or Bitcoin is about to sell off and ETH is about to get absolutely decimated. So the weakness in ETH tells me that it's probably going to lose substantial amount of value in comparison to Bitcoin. So are we coming back down here to the heart line in the 200 exponential and simple moving average at 0.05 ETH per Bitcoin? Yep, probably. But what do I know? I mean, we just used the gold-silver ratio to tell what gold and silver were going to do, while the charts were being deceptive, telling us they were going to go to the upside, and then the gold-silver ratio told us that they were actually going to get crushed. And crypto's doing literally the exact same thing. And the crypto, like ETH to Bitcoin chart is telling us the exact same thing. ETH is the silver, Bitcoin is the gold. And the market was lying to us, and we saw it because of this chart right here. And now we're seeing the exact same thing on the Bitcoin to ETH chart, the quote-unquote crypto silver gold chart, and everyone's the most bullish they've ever been in their lives. Sure, I'm sure that the technical analysis is probably just wrong. I'm sure that's it. Basic attention token broke through the 200 simple finally, hanging out at resistance. Great. Next target to the upside, probably $1. At that point in time, I think there's no way it's getting above $1. I shouldn't say no way, but very unlikely. Excuse me. Dash, the worst crypto in all of existence, having a nice little move up here, definitely overperforming. The Dash cult is finally, back in action. They're extremely excited, but what they don't realize is Dash is one of the most pathetic, horrible cryptos in existence and still has not put in a new all-time high this entire cycle, while other things went up like tens of thousands of percents. Even joke coins like Dogecoin went up exponentially, thousands of percent gains, and Dash couldn't even make it to its all-time high. And XRP, don't think I forgot about you. We'll get there in a minute. Polkadot, underperforming, barely got back up to the 200 simple, looks pathetic here, trying to grind higher. If it does get through these resistances, maybe we get up to like 35 bucks. Looks pathetic. Dogecoin, back up here above support, trying to hang on. Next move back up, a retest of like 42 cents. Can the Doge call push this back up? Sure. I think the meme money can just move around. I think Doge is probably getting due. Uniswap, underperformer. It's up here above the 200 simple, but looks pathetic. Does not look strong. Looks very weak. All the daily, no strength on the daily here. All red histograms. Pathetic. Next chart, target to the upside, maybe like 34, 35 bucks. Pathetic. Chainlink, even worse. Terrible underperformer. Can't even get above its 200 simple moving average. Absolutely pathetic. This thing was a massive overperformer the whole bull run, and now just no one is interested in it. Total trash. Maybe pushes back up to like $31. This is just a trash coin. Matic, well, chart-wise. Underperformer for sure. It's trying to push back up here. This thing, hey, it's showing some strength here. This thing might run. It took out this high right here, which is what we really wanted to see. On a daily close, I think Matic's probably going to like 220. It sold off extremely, extremely heavy, and has had a real nice run since then. I shouldn't say it's an underperformer. It's actually doing very well right now. XRP, total trash, consolidating. Looks like it wants to push up here. Do I think XRP gets back up to $1.58? Sure, it could, definitely. Total piece of trash. The moving average chart looks good, but still no new high this whole bull run. Come on, XRP. Get your cult together. Pump each other up. Get your grandmas to spend their money on the XRPs. You need to recruit XRP. Your cult is just dying slowly but surely, and all you got to do is just get out there. I don't even see the XRP to the moon post anymore. I don't even remember isn't XRP supposed to go to like $7 or something really soon, or like $100 or $500? Like, are you guys even pushing that narrative, or did you all drink the Kool-Aid and die? Come on, XRP cult. Do more. Solana, crushing it. Been crushing it. We expected this to start crushing it as soon as it broke through $41. Since then, it's up 100%. Still looks great. Showing some weakness on the daily, though. All those people probably went to Cardano. Again, we said we expected new all-time highs here. It is still pushing up here. Getting the hard buy signal at the top of the range. This is probably one of the strongest cryptos right now. Absolute total piece of trash. But right now, the chart looks great. Bitcoin dominance, getting rejected. Expecting this to just come down to another lower high. Or higher low, I'm sorry. Total market cap on the weekly, at resistance, exactly where expected. Just over 2 trillion. Maybe going to put in a new all-time high soon. I think it's going to be very hard to do. How is this market cap even up? How are we even retesting previous all-time highs on the market cap when almost every crypto is looking like total shit in comparison to this chart? So somehow a couple key cryptos once again are like propping up the entire market cap. So you better hope you're in the right ones. Riot blockchain looks terrible. Much rather just buy Bitcoin. This chart looks absolutely terrible. Barely hanging on to 200 exponential and simple. Could not get above that key resistance. Got rejected. Probably, eventually maybe comes back up here and retests it, but it looks terrible. Coinbase, massively underperforming. You're much better off actually just buying crypto than investing in this piece of shit company. MicroStrategy. Long term, I do like Coinbase though. MicroStrategy, total piece of garbage. Probably the worst stock in existence. Right there with Intel. Total shill stock. Total crap. Michael Saylor, total piece of trash. GME, GameStonk. Hit our perfect target to the downside. Complete weakness. Absolutely terrible. You little meme jokers need to start propping this up. I think we're headed back up here to like 215 soon though. Robinhood, completely bleeding out as expected. Finally got that push to the upside, and now it is literally just bleeding out. Robinhood's throat was slit, and now the blood is just leaking out of its body, and very soon it will go down to a new low. I expect this below $30-something very, very soon. AMC, the apes are slowly but surely giving up. I still hear them trying to pump their AMC coin, but the truth is they were just hanging out with each other, and they were literally just drinking each other's poop or pee and eating each other's poop, and now they all have pink eye and their tummies hurt, and they realize now AMC is never going to 100, it's never going to 1,000, it's never going to 10,000, and the truth is it's probably going to bankruptcy. So all the apes probably living in their mother's basement for the rest of their lives, and they probably have convinced their mothers to invest in this piece of shit company as well. So have fun watching movies with your mom in the basement for the rest of your life. $25 next. After that, probably $18. The AMC army is slowly just slitting their wrists, metaphorically speaking, and one day it will probably be true, literally speaking as well. So, but don't do that. That's bad. It's better off to just be poor, living in your mom's basement, having her bust your chops for the rest of your life. Don't do drugs and don't hurt yourself, and love each other. Bed Bath & Beyond looks absolutely pathetic. Meme stock that's dead. Coin. Wait, did we look at Coinbase already? Oh, I think I went back in time. Newegg. Looks pathetic. This thing is just getting rejected at clear support / resistance. It probably stops at like 1366. But look, Newegg's going to be at $10 very soon. $10.80. Mark my words. Newegg is about to just get absolutely destroyed. Maybe it has a little upside before then. Maybe one more attempt. But this thing is just going to get absolutely wrecked. There's literally 1 day of price action holding you up right now. And when that 1 day fails, get ready. DraftKings consolidating in between 200 exponential and simple as expected. Losing strength. Does not look good. Does not look good. This is a giant bear flag. After a nice move to the downside. So I don't know what's going to happen here, but it's probably not going to be good. I mean, maybe it is, maybe it's not, but in my opinion, looks like it's probably just fueling up for continuation to the downside. Maybe something changes, but as long as we're just consolidating in this range, I think we're at the top of the range, and we're coming back down to like $44 or something like that, and we are slowly losing slope on the 200 exponential and simple. This is literally death throes of the market. Looks terrible. Crown Castle International, the old REITs. This again came back up here, filled the gap almost perfectly. After we spoke about it, it literally did exactly what we said. Filled the gap at 200, and I think it's going to sell back off. It's important that you pay attention to like REITs and TIPS. These are both like inflation hedges. So the inflation narrative is slowly just dying. I don't know if anyone else has noticed that, but all the people that were calling for inflation and hyperinflation and this and that, slowly but surely, the Google trends, slowly but surely, the influencers calling for inflation are just dropping off a cliff. And eventually, once they drop off a cliff, we'll see gold, we'll see silver, we'll see bonds, we'll see REITs, we'll see TIPS, we'll see all these inflation hedges slowly just bleeding out. And this is a perfect example. We see bearish divergence, a gap down, a retest, attempt to fill that gap, and then probably we're going to retest 200 exponential and simple. See at 180. Probably do okay on these long term though, because I think a lot of the income derived from these companies is probably going to do okay, because even if the housing market crashes, these companies are not just based off of the values of the homes, they're based off of rents as well. But I don't know. I think rent is just going to absolutely capitulate once all these like bum squatters get kicked out of their houses. Once they stop extending these moratoriums, and start obeying like the actual law and stop forcing privately owned, houses to be given to people who are basically just squatters. And who knows? Places like California will probably just be like, oh, they live there so long without paying rent now, they actually have squatter rights. So now you can't kick them out ever. And technically they own your house. But you know, these like commie countries or commie states are like just total shit, and they're just gonna eat themselves alive. I mean, 100%. Uh, Applied Materials, AMAT. Again, just you know, we looked at like the material sector. This thing's just going sideways at the top of the range. I would not be surprised to see this push up here and put in a new high, and then we see that Wyckoff distribution pattern playing out. Now it could just easily come down to like 117, but I would not be surprised to see this thing hit 150. It did top out at a key fib level though, so but you know, bears are in control. A bunch of red histograms at the bottom of the range, so looks mediocre right now, but could start showing some serious weakness. But we did it. We made it through the assets. And once again, everything looks terrible. Crypto, Bitcoin starting to show some more strength here, trying to push up. You know, once again, we got to get all the dumb money just super, super bullish and just FOMOing in. We got to get that leverage up. We got to get people buying in at ridiculous valuations so that we can just absolutely destroy them. You got to distribute all over the idiots' faces. I mean, that's just how distribution works. That's how FOMO works. You know, this is just another lower high before the 1 year capitulation bear market, in my opinion. And that will not change until something changes technically in the charts. And I don't see it right now. I do not see it yet. Does not mean it can't still happen. I am still technically long in these markets as of now. I do want to make one little statement about leverage, as all I hear from everyone is there's almost no leverage in these markets. Leverage is at super low levels. So once the leverage does come in, to the moon, new highs, hooray, crypto. Oh, there's no bubbles here because no leverage. Well, the United States, like literally like a bunch of the exchanges got rid of leverage completely. So you can't leverage, and got rid of shorting completely. So you can't short. So now you have a massive portion of the world crypto market unable to short and unable to use leverage. So while there's less selling pressure because you can't short, there's also never going to be the same amount of momentum to the upside because you can't leverage the plays to the upside. So while we do have momentum right now and we're slowly just like melting up on crypto again, without leverage, we're never going to get to those new levels again unless we can just replace the levered positions of the crypto cult with new cult members. So maybe we do that, but you know, I don't even hear people talking about crypto in the same way. I don't see all these people talking about crypto to the moon in the same way. I see some irrational like bullishness. I see some people saying this is it, 100,000, we're going to push back up. But you know what? Look at all these crypto influencers. Look at all these cult members making YouTube videos talking about their favorite cult. And you know what? Viewership is down. Google Trends is down. Leverage is down. We're never going to make new all-time highs without that stuff. So I think crypto has topped. 64,000 was the top. The next top's going to be 52,000 or somewhere in between there and where we're at right now. That's my prediction. I have technicals to back it up. Still love crypto. Still believing in the future. But let's be real. This bull market is over. We are just literally seeing the death throes of the market right now. We're seeing big money just dump on top of all the suckers' faces before the capitulation move. So, well, there you have it, guys. Crypto Trend Trader with our Sunday market look ahead. I am Crypto Trend Trader. It is 9:53 on August 22nd, 2021, Eastern Standard Time, and I'm out of here.